series. I'm Tish Biggs, an Indiana volunteer with AARP with the Greater Indianapolis team. In this three-part virtual series, you will hear from Social Security experts on information and resources to help you get the most out of this incredibly important program. Whether you're approaching retirement, planning for the future, or simply seeking a deeper understanding of how Social Security works, this webinar series provides an opportunity to empower yourself with knowledge. We also hope you walk away feeling empowered to be a champion for Social Security and its future. In tonight's session, Social Security, Understanding Your Spouse/Survivor Benefits, we are excited to welcome Charo Boyd. She is a public affairs specialist with the Social Security Administration. Charo will explain spouse and survivor benefits in an easy to understand format to best meet your needs. Joining her is AARP Indiana's Directors of Community Engagement, Emily Gorman and Addison Pollock, who will facilitate our conversation and relay any questions that you may have. A few housekeeping items are in order before we get the program kicked off. Please use the Q&A function or chat to enter questions you may have during tonight's program. We will do our best to address as many questions as time allows. I also want to remind viewers that we will be joined by Jamie Lyell, the program manager with AARP, for the third and final part of this series. That one is entitled Social Security, AARP's Guiding Principles and Commitment to Preserving Social Security Program. It will be on Monday, May 6th, starting at 6:30 Eastern Time, 5:30 Central Time. You can register at the link in the chat or at www.aarp.org/IN. I now want to introduce our special guest, Charo Boyd. Charo is the Social Security Administrative Public Affairs Specialist for Central and Southern Indiana. She is responsible for informing the public about Social Security programs and benefits. She is often the guest speaker for retirement and disability seminars. She has also trained HR managers, financial planners, tax preparers, social workers, case managers, disability advocates, and attorneys on various SSA topics. She has been employed with SSA since 2002, and she began her career as a claims representative in downtown Indianapolis SSA office. She has worked as an insurance specialist in all areas of the Title II program, which is Medicare, retirement, survivor, and disability insurance benefits. She has a BS in psychology, and she graduated magna cum laude. Good. And an MS in guidance and counseling with a concentration in clinical and organizational counseling, with a concentration in clinical and organizational counseling from Tennessee State University. She received the Regional Communicator Award in 2010 and 2018. She also received the Deputy Commissioner citation in 2010, 15, and 2018 from the SSA Office of Communications. Before we hear directly from Charo, I'll turn this over to Emily and Addison. Emily, Addison, it's all yours.
Thank you, Tish.
Appreciate it, Tish. Emily, how are you this evening?
I'm great, thank you. How are you, Addison?
Doing fine, doing fine. I'm so glad that we're joined not only by Tish, but by Charo, our our special guest who was with us last week. So I want to invite Charo to join us up here on the screen. I appreciate everyone taking time out of their evening to be here tonight. We are going to cover spouse and survivors benefits tonight, which is building on last week's topic of age and wages. So before we dive into this new topic tonight, Charo, can you just give us a quick recap and review of what we covered at last Monday's session?
Absolutely. Thank you so much, Emily and Addison and Tish, for that wonderful introduction. You know, as we get ready to go and talk about spouse and survivors, it's important for us to do, like you said, a recap, a review of some of the things we talked about last week, because they also apply to our to spouse and survivor benefits. Just to do a high-level overview, there's going to be 3 points that I'm going to talk about in our review. I'm going to talk about how a person becomes eligible for benefits and how that amount is calculated. I'm going to talk about how age affects your benefits, and then lastly, how wages affect benefits. Emily, can you start us off with our first question that we're reviewing from last week?
Absolutely. So a question that we had submitted last week that relates to this, it's the unanswered questions, right, that we're going through? Yep, sorry. I have a relative that is approaching 50 and has only worked 2 to 3 years to date through his career. Is he eligible for Social Security based upon this? In other words, is there a minimum years to work to collect? Is the question.
Awesome. And that question helps us to start off just as we're going through that foundation. And again, that first point of how does a person become eligible for benefits? So as we're talking tonight about spouse benefits, how does the worker become eligible first, and then the spouse is eligible in that worker's record? The answer is that the worker has to have worked and paid into Social Security in order to be eligible for the benefits. As you work and your wages are taxed for Social Security, you're earning credits or quarters of coverage. The most credits that you can earn in a year are 4. A credit this year in 2024 is on earnings of $1,730 that are taxed for Social Security. To summarize that up very briefly and to answer that question, the bottom part of our slide explains that in order to be eligible for Social Security retirement benefits, you need 40 credits or 10 years of work. So that question asked, was there a minimum number of years that you needed to have worked and paid into Social Security in order to be eligible? And that answer is yes, it's 10 years of work for 40 credits. Another question that had came in was in regards to your wage and how the years that we're looking at when we're computing your benefit amount. And so just again, as we're doing that quick high-level review, you need the 10 years of work to be eligible for benefits, but when Social Security computes your benefit amount, we utilize your highest 35 years. So we look at all your wages that have been taxed for Social Security, we increase them for inflation, and we cherry pick the highest 35 years, average them, and we put them into a formula. For more details, again, you can look at last week's session, but the average American Social Security benefit is roughly about a 40% replacement rate of those average wages. Again, it can vary, and we talked about there about some online tools, but again, one of the when we're looking at your wages, we're looking at those highest 35 years, and so we increase them for inflation. So I think the question for that past one, and I apologize, Emily, was, you know, the person talked about if their wages when they first started, that the minimum wage was a lot lower than it is now. And do we account or adjust for that? And the answer is yes, because we index your wages. Emily, what's that next question there?
So the next one I have is I've got more than 35 years working, but not FRA. If I income job and take a part-time lower paying job or apply for Social Security, will that lower my Social Security benefit?
Thank you so much for that question. It's such a great question. We're talking about planning. And so I want to direct you to some online tools that we mentioned at the last session. Creating that secure My Social Security account is a great starting point for everyone. You simply go to ssa.gov/myaccount. You're able to log in through login.gov or ID Me. When you're there, there's some fabulous tools that you're able to use in that My Social Security account. Last week, we talked about the Social Security statement, But to answer the question that just came, to answer the question that that was just asked, and I apologize. I know my time, and so I'm just going to slow myself down. I know we only have so much time today, and I'm trying to get everything in, but let me slow down. So for the question that was just asked, it talked about what if the estimate that you're getting on that Social Security statement, what if things change in that? Will that affect your benefits? So they already had 35 years of wages, and they're saying that if they stop work now or they work a part-time job and have lower wages, will that affect their benefit amount that they're planning for? And my answer to them is that when we utilize your highest 35 years, when you look at that Social Security statement, it does a big assumption. It assumes that the wages that you earned last year, that you're going to keep earning those wages until you reach age 62 or whatever, 67, etc. And so if that's not your plan, then that Social Security statement is not the best estimate. And so within that same secure My Social Security account at ssa.gov/my account, there's a retirement estimator. And I say this because as we're going to have our robust discussion about spouse and survivors, you know, the starting point is, what is that worker's benefit amount? And what if that worker is trying to figure out, what if I get a promotion and have higher wages? Will that increase my amount? Or what if I stop work now at 57, but I'm not going to start benefits till 67? How are those 10 years of zeros going to affect my benefit amount? With this tool here, with the retirement estimator, it's interactive. So you're able to put in those different scenarios, and based off of those scenarios, you would get an estimate of your benefit amount.
That is such a great tool. Thank you, Charo.
Absolutely.
Charo, did you have more to add on that, or did you want to move on to the next question?
Let's go to our next point in regards to ages. Let's talk about how a person, let's talk about how age affects a benefit amount. Again, we had 3 points to review. That first point of reviewing was how you become eligible for benefits and how is it calculated. Then the second point is, how does age affect benefits? When you look at this chart, again, you see your full retirement age. So you find the year you were born. Then next to it, you see your full retirement age with Social Security. The 3 key points here. Middle bullet, if you wait till full retirement age, you get the full benefit amount. If you start that benefit early, it's permanently reduced for each month you get it early. Earliest you can start benefits on your own record, you have to be at least age 62 throughout the entire month. Last bullet, if you chose to delay receiving your benefit, then your benefit increases for each month that you delay. You can earn those increases all the way up to age 70. Again, we just are doing this review because some of these principles apply to what we're going to talk about tonight. So I'll just go ahead and explain that when we're talking about spouse and survivor benefits, if you're receiving a spouse or survivor benefit before your full retirement age, then you're reducing it because you're getting it early. So again, it's so important to understand how age affects benefits. As I go to the next point, do we have a question here that'll lead us into our next topic?
Yeah. So related to how wages affect benefits, we do have a question related to that. What is the difference between the monthly and yearly earnings limit when you first file for retirement benefits?
That is such a great question. So again, we're building. So we understand our age when we start receiving the benefit is going to permanently affect how much of that benefit we receive. That next layer of understanding was that wages may affect our benefit depending on what our age is. And so again, for more details, go and watch last week's session. But for the question that led us into this slide, it wanted clarification on the difference between the yearly wage limit and the monthly wage limit. And so if you're receiving benefits and you're under your full retirement age, you have this yearly wage limit. You see on your slide the $22,320. If you go over that limit, Social Security withholds $1 for each 2 that you go over. But the extra detail, and I know you all are here because you're planning, is that in addition to the yearly wage limit, the first year you start receiving benefits, you also get a monthly wage limit. The monthly wage limit is just the yearly number divided by 12. And a good example to explain that monthly limit would be if I earn 30,000 from January through June, retire the end of June, start Social Security the 1st of July, in that scenario, I've already earned over the yearly wage limit, the 22,320 this year. However, since this is the first year that I'm receiving benefits, automatically, I don't have to ask for it, automatically, in addition to that yearly limit, I get the monthly limit, again, that yearly number divided by 12. In this example, it means that beginning the month I'm eligible for benefits. So beginning in July, as long as my wages are under the limit, then I'd be able to receive my benefit. I'd have that monthly wage limit through the end of that calendar year. The next year, Addison, I would just have that yearly wage limit. So you only get that monthly option that first year. And when we say wages, again, for more details, watch that first session. It was so awesome. But we're talking about what you are working and earning. Basically, what you're working and earning is what we're looking at. We're not looking at your annuities, your investments, your military pay. We even talked in that last session that there was only one pension that may reduce Social Security, that non-covered pension. I wanted to highlight just to again, as we're having the conversation, preparing the conversation about spouse and survivors, that we have some phenomenal online tools at ssa.gov. And so when that question came up in regards to wages, just know there's an earnings test calculator that we have that you're able to plug in the data. And at the bottom of that calculator, it asks if this is the first year you're receiving benefits. So it knows whether or not to give you that option of that special monthly rule. There was a question that came in last time, and that question was in regards to they were talking about here when we're talking about the wage limit, and they were saying if you go the $1, if you're the year that you reach for retirement age, if you go over the limit, they said, are you paying taxes on $1 for every 3? And so I just wanted to clarify, and I threw in the slide here to talk about taxes because earlier we're not talking about taxes. That's a penalty to where Social Security is going to withhold some of your benefit because you have wages over the limit. When it comes to taxes, we're in a whole different discussion. On this slide here, it explains that when it comes to the taxation of Social Security benefits, you have to determine what your combined income is. So combined income is that adjusted gross income plus non-taxable interest, and then half of your Social Security benefit. When you add all that together and get that combined income, just for brevity's sake, if we want to just talk highest liability for a person doing an individual tax return, if that combined income is over $34,000, or for a joint tax return, if that combined income is over $44,000, then you're at the highest liability, and that means that 85% of all the Social Security benefit that you receive that year is going to be included in your taxable income. So Addison and Emily, I know you all know you're not taxed at the 85%, is that the highest liability is that 85% of the Social Security benefit you receive for that year would be included in your taxable income. Again, more information is here on this URL. And this ties into our topic for today, because if you're receiving spouse benefits, you're still going to, Social Security is going to look at that combined income to determine how much of that Social Security benefit is going to be taxable. So again, really quick high level overview, talked about how you become eligible, how age affects benefits, wages, and we snuck in taxes.
Really quickly before you dive into your next section, Charo, I did just want to remind everybody, please, if you can use the Q&A function if you have any questions, that way we can kind of filter them out. The chat can get a little confusing sometimes with questions and comments. So if you could please use the Q&A function at the bottom of your screen to submit any questions, and we're going to have a Q&A portion at the end of our presentation to make sure we get to everybody's questions. So if you want to wait and then put your question in after, you definitely can. But just a reminder, please use that function at the bottom just so we can see the list of the questions coming in on our screen. And with that, Charo, I'll let you.
Awesome. Thank you so much, Emily. So now we're at our topic at hand, spouse and survivor benefits. When you hear me say spouse benefits, I'm talking about that the worker is alive. I'll do a very hard pivot when we talk about survivor benefits when the worker has passed away. I've been with the agency for 21 years, been the PR person here in Indiana for the last 16. And I know those two benefits, sometimes the understanding of eligibility between them gets confused because sometimes, well, there are similarities and there are differences, but those similarities cause you to kind of get confused. So first up, let's talk about spouse benefits. As Emily shared, if you hold your questions till the end, most likely I might explain it because I'm slowing down now. This is what we're here for. I might explain that answer before you get there. So first off, the worker has to be receiving benefits in order for their spouse to receive on the record. The spouse can receive as early as age 62, but remember what we just learned, you start benefits early, you're reducing it because you're getting it early, but that spouse can start as early as age 62 on the worker's record if the worker's receiving. There's a special provision that the spouse can receive at any age on that worker's record if they're caring for a child of the worker that is under the age of 16 or has been determined disabled by Social Security before age 22. How much is a spouse eligible for? That's our next slide. And sorry for the delay in pulling it up. That first bullet really goes into the detail when we're talking about how much is a spouse eligible for on the worker's record. It explains that a spouse is eligible for up to 50% of the worker's unreduced benefit. For my note takers, I would encourage you to write next to unreduced benefit, write benefit amount at full retirement age. So to say that differently, the spouse is eligible for up to 50% of the worker's amount at full retirement age. And this is an important point. I've seen this misquoted on large stages. So that means when we're talking about the worker alive and how much that spouse is eligible for, let's say if the worker's amount at full retirement age was $2,000, but the worker tapped in early and reduced it, the worker does not reduce it for their spouse. Because again, with the worker alive, that starting point is that 50% of what that worker's amount would have been at full retirement age. Just to say it different for clarity, if the worker delayed and increased their amount up to age 70, they do not increase it for their spouse. Again, we're talking about the worker alive because you all know, again, that first bullet is 50%, up to 50% of what the worker's amount was at full retirement age. I think it's important to note our bottom bullet that a spouse receiving on a worker's record does not reduce the worker's benefit. If I could add to our discussion, ex-spouses may qualify for benefits on the worker's record. So let's pause and talk about the difference in eligibility for the current spouse and the ex-spouse. The current spouse has to be married to the worker for 1 year in order to be eligible on that worker's record. And with the current spouse, the worker has to be receiving in order for that current spouse to receive on their record. I always say it's opening the door. That worker has to open the door for their spouse to receive on their record. When we come to our slide here and we talk about ex-spouse benefits, it's a different eligibility criteria. Ex-spouses have to have been married to the worker for a complete 10 years. They need to be divorced for at least 2. They both need to be at least age 62, and the ex-worker has to be unmarried at the time of filing. I think our bottom bullet is one of the key points when we're also talking about ex-spouse benefits, and that's that the ex-spouse receiving on the worker's record does not reduce the worker, and if the worker is remarried, does not affect the worker's new spouse. So that ex-spouse is completely independent. How much is the ex-spouse eligible for on the worker's record? We can go backwards a slide. It's that same starting point as the current spouse, that up to 50% of what the worker's amount would have been at full retirement age. To fill in a few more gaps, I want to talk about combining benefits, because what if the spouse is eligible for benefits on their own record and the worker's record? How will Social Security compute that benefit amount? I'm going to use an example for clarity. Let's keep our worker at 2,000. So worker's amount at full retirement age is 2,000. That means their spouse is eligible for up to 50%. So that starting point is $1,000. Let's say if the spouse's amount at their own full retirement age is 600, then that means best case scenario at full retirement age, the spouse could get 600 on their own, and then that additional 400 on the worker's record to be that combined amount. That's what that third bullet is explaining, that combined amount of half of that worker's amount. Again, in our scenario, 600 plus 4 equals that 1,000. If the spouse tapped in early before full retirement age to that benefit, then they would be reducing it because they're getting it early. Again, I think it's important to note that the spouse and the current spouse receiving on the worker's record, they do not affect the worker's benefit. I'm going to do a pivot. And again, this is a high level overview. I want to do a pivot and talk about survivor benefits. If the worker passes away, the first big difference is the amount that the survivor is eligible for. You see on your slide, it says up to 100% of what the worker was receiving. So this is totally different language than when the worker was alive. Worker alive, 50% of the worker's amount at full retirement age is the starting point. But if the worker passes away, it's up to 100% of what the worker was receiving. And so just for our point of clarity, if the worker tapped in early and reduced their benefit, then they reduce it for their survivor. If the worker delays and increases their benefit, then they increase it for their survivor. You all get it. It's because of that up to the 100%. A question that's often asked is, what if the worker passes away before they started receiving? And the answer is then that survivor would be, that starting point would be what the worker's amount would have been at full retirement age, unless the worker had delayed receiving benefits. So when we say delay receiving benefits, that means the worker's past their full retirement age. In that scenario, we would the delayed retirement credits would go to the survivor, so that benefit amount could be increased. Again, keeping things high level overview and remembering what we learned in the beginning, that age affects benefits. So that survivor is starting benefits before full retirement age. And our third bullet explains that survivors can start as early as age 60. Then it's reduced because they're getting it early. And remember, that means that they're subject to a wage limit because they're under full retirement age. Last bullet on this slide is a big difference when it comes to survivor benefits. And it explains that survivors have the option to switch from one record to the other. So an example for clarity there would be, if I was married, my spouse passes away, and I have not started benefits on my record at all, I have the option to receive on one record and switch to the other. So maybe I start on mine, switch over to his, or maybe I start on his, switch over to mine. The important thing to note is that your own Social Security benefit is the only one that gains or earns those delayed retirement credits. So your own is the only one that grows past full retirement age up to age 70. Few more things, and then we're going to get to the good part, your questions. But I wanted just to add some extra details about survivor benefits. And I want to talk about our bottom two bullets, remarriage and divorce. With remarriage, and again, spouse benefits, that's the worker alive, and survivor benefits, I can see why the rules are sometimes confusing to folks because of the similarities. And so I want to talk about a difference in regards to remarriage as well. So when the worker's alive and we're talking about spouse benefits, if the spouse remarries and that terminates their eligibility, that stops their eligibility at that time while they're currently remarried. When we're talking about ex-spouse benefits. But when we're in the survivor room and we're talking about remarriage, it's different. So let me give a scenario. Let's say if my spouse passes away, I start survivor benefits on their record at age 60, and then at 63, I find love again and I remarry. When I remarry at 63, that remarriage, and again, we're second to the last bullet, that remarriage is protected. And that's because the rule is in survivor benefits, a remarriage after age 60 is protected, age 50, if you meet that special disabled survivor criteria. But again, that remarriage is protected. So in my scenario, started survivor benefits at 60, remarried at 63, that remarriage does not stop my eligibility on my deceased spouse's record. I think that is so important to note. The last bullet, just in survivor benefits, in some situations, a divorced spouse may qualify. So a divorced survivor may qualify for benefits on that deceased worker's record. I'm sure lots of questions are going to come in regards to spouse and survivors. That's why we're here tonight. Let me just give a little bit of housekeeping before we get to those Q&A. I want to make sure that you all know how to apply when you're ready to apply. Our website, ssa.gov, is a great resource. 2 to 3 months before you want benefits to start is a really good rule of thumb. If you didn't want to do your application online, you can call us at 1-800-772-1213. Make an appointment. That our phone appointments were very popular before the pandemic. They're still popular now. If you did want to do things by phone, you do have that option to come in. But again, I wanted to just talk about that good rule of thumb, 2 to 3 months before you want benefits to start. In a survivor situation, we encourage you to reach out to us as soon as possible because there could be limitations on how far we're able to go back for payments depending on the month that you contact us. Our website, ssa.gov, lots of great information, which I'm sure we'll break down a little bit later. And I think we're here and get ready for the good part, the folks where I know folks have questions. We're extending tonight's session a little bit longer than the 30 minutes that we did before. Emily and Addison, what questions do we have?
Well, I was going to give you a second if you want to have a look at some of the questions in the queue and just remind folks that if you do have a question about anything that Charo just presented on, please make sure you submit that into the Q&A so we can add it to our queue. And we're going to try and get to as many as possible. And then I did also just want to make a note that we've had lots of questions in the chat about whether this is being recorded and how we can find it later. And I just want to assure everybody that we are recording and we will make sure that we post these on our website, which just as a reminder is www.aarp.org/in. So be sure to check back there and you'll find the recordings for last week's episode as well as this one. And we also have another episode coming up next week, as Tish mentioned earlier. So I just wanted to add those things in and then I will hand off to Addison.
Yeah, sure. Charo, I do have a quick question on that rule of thumb that you had presented about applying or contacting the Social Security Administration, applying about 2 to 3 months before you want to receive benefits. Is that generally how long it is of a wait time before you start receiving benefits? That's one of the questions in the Q&A.
Oh, thank you so much for that question. We recommend that you reach out to us 2 to 3 months before you would want a retirement benefit to start, but we could actually have you paid on time, even if you contact us the month you want benefits to start, because we pay everybody a month behind. So there's not necessarily a wait for when your benefit starts. We pay everybody a month behind. So if I wanted benefits to start in January, I could reach out to Social Security in January, still be paid on time because January's payment comes in February. We just encourage you to reach out to us those 2 to 3 months beforehand, just to help make sure if there might be any special situations in your case that we can be able to help resolve them. Thank you for that question.
And thank you. Yeah, that is impressive. So I appreciate that. We do have one question that came through the chat. Again, please use the Q&A for all your question submissions. But this is sort of a general question, so I would love to take this one. If your spouse receives a pension, does that affect the amount a spouse will receive? I don't know if you can address pensions as income and if that will impact that, or if maybe we want to answer that one offline.
Thank you so much for the question. So the question, if I heard you correctly, it says, if a spouse is receiving a pension, will that pension affect that spouse's benefit on the worker's record? And my answer is going to say it depends on the type of pension. And we added some slides for this go round to try to be prepared. So I'm going to go to and apologize for all that you're going to see, but it depends on the type of pension. Because if it's a non-covered pension, non-covered means when you work for that employer, if you did not pay into Social Security and you're getting a pension from them, that non-covered pension may reduce your Social Security benefits. And so there's a URL here on this slide where you're able to go and get more detailed information about non-covered pensions. When it comes to that spouse benefit or survivor benefit, our topic tonight, it could be a reduction up to 2/3 of that non-covered pension. But again, I don't want to confuse anyone. The key in my answer was the non-covered pension. If I was receiving a covered pension, That means when I worked for that employer, I did pay into Social Security, then that pension would not reduce the benefit I would be due on that spouse's record. Thank you for that question.
Thank you, Charo, and I'm so excited that you had all these slides that we can just pull up as needed. I'm just looking for a specific question that I saw earlier. I just found it. So the question is, if I apply online, will I have the option to review my ex-husband's Social Security benefits to see if they are more than what I would make based on my earnings? We were married for more than 10 years and I have not remarried.
Thank you so much for that question. And the answer is no, you would not be able to see what your ex-spouse's amount is online. What you would need to do is to give us a call at that toll-free number, that 1-800-772-1213, and make an appointment. During that appointment, that claims rep would be able to, after we verify some information about you, that claims rep would be able to explain to you what your eligibility would be on that ex-spouse's record. Again, on that ex-spouse's record, we're not going to notify them and let them know that you're applying for benefits on the record. We're going to need to have proof of your marriage to them, proof of your divorce, and proof of any divorces, proof of end of marriages for any marriages that would have happened afterwards. But again, to answer your question, you would need to contact us. Thank you.
And actually, Charo, while we're on that topic, we do have a couple questions in the Q&A here about the phone number as well and how to contact. So I don't know if you wanted to flip back to that how to contact us slide just so folks could see it again, or maybe we could revisit it at the end of the presentation, whichever works best. But there are a few. Can you repeat the phone numbers in here?
Absolutely. Thank you, Emily. I have it to that slide.
Thank you. So people can take a picture. They can also watch the recording. Just wanted to get to those ones.
Awesome. Charo, the last question we kind of left on was exes and being able to access certain information. Question related to that topic: does an ex-spouse have to be single to receive those benefits?
Thank you so much for that question. I'm going to go back to our slide. So does an ex-spouse have to be single in order to receive on the worker's record? Or if the worker is alive, the answer is yes. So let's just walk through that on our slide here. It talked about that eligibility for that ex-spouse to receive on that worker's record. And the answer is that you would have to be unmarried at the time. So you could have had previous marriages beforehand, but you would need to be unmarried at the time when you're receiving benefits on an ex-spouse's record. And that was different than when we were talking about survivor benefits, because in survivor benefits, when we had that discussion, we weren't talking about, when we had the discussion about remarriage, we weren't talking about divorce. We were talking about that as a survivor, you were receiving survivor benefits, and then you later remarry, how that remarriage is protected after age 60 or 50 if you meet that disabled survivors criteria. Thank you for that question.
Thank you. So the next one we had is kind of an overview one that we might be able to flip back to some slides for as well. But somebody is asking, what is the process to get survivor benefits, and what do you do once your spouse dies?
Thank you so much for that question. So if your spouse passes away, you want to start off by contacting. And so again, our toll-free number, and I'll go back to that slide a little bit later, that 1-800-772-1213 to make an appointment for benefits. I think the other part of that question is, is the eligibility. How much are you eligible for? When we're talking about survivor benefits, again, you can be eligible up to 100% of what that worker was receiving. If the worker was not receiving benefits, if they pass away before they start, then we're going to look at that starting point is going to be what that worker's amount would have been at full retirement age, unless the worker's past full retirement age. Emily, was there another part of that question? I want to make sure I don't fall short to answering their full question.
Yeah, so the first part was, what is the process to get survivor benefits? And then the second part was, what do you do when your spouse dies? So I think that you got to both parts of that.
I want to add something to that discussion, that when we're talking about survivor benefits, we're talking about a couple. And so you would have had two incomes coming in. My example today, I talked about the worker being $2,000 and the spouse being $600. If the worker passes away, best case scenario, that spouse is going to go up to what that worker was receiving. But the reason I wanted to go into these details is because in general, when it comes to survivor benefits, we're going to pay whose ever benefit amount is the highest. So in that same example, we had 2,600. If the spouse passed away that was getting the 600, we're just going to continue to pay that worker their 2,000. I think that is so important to note, because you've lost the love of your life, and there's also going to be some income that's lost. And I want you to know that now, as you're understanding the benefits, not when that situation would happen.
Thank you, Charo. That's really helpful. I do have another general question. A lot of the questions coming in are very like specific to individuals' situations, so I'm trying to gravitate towards the ones that are a little bit broader in nature. So here's a good one. If I take, it has to do with spousal benefits. If I take spousal benefits before I apply for my own, does that decrease my amount when I finally apply for my own benefit?
Thank you so much for that question. We have to be detailed here in this answer. I'm going to take it back to those college days and those true or false exams, because one word in that question on that true or false could make a difference between that question being true or false. And so, Addison, could you reread the question for me?
Yeah, of course. If I take spousal benefits before I apply for my own, does that decrease my amount when I finally apply for my own benefit? So I think the assumption is that they will be applying for their own in the future, but want to take their spousal benefits beforehand.
Thank you so much. And so the key word is, you said spousal benefits. If I take spouse benefits first, can I switch to my own? And the key word, reason why spouse benefits is key, is because when I think of spouse benefits, I think that the worker is alive. And so if the worker is alive, in general, you're deemed to have filed on your own record first. I'm going to go to a slide. Please forgive me as you have to see all the additional slides. But we have some deemed filing rules. And so if you were born, for those that were born January 2nd, 1954 or later, when you would go to receive on a spouse's record, we're talking about that worker alive. So this is spouse or ex-spouse, that the worker's alive. You're deemed to have filed on your own record. You have to tap into your own benefit first before you could receive on their record. But that's spouse benefits. Now, if we're talking about survivor benefits, as survivors, we did talk about that survivors is special. That with survivor benefits, you have the option, that bottom bullet, to switch from one record to the other. So if the worker had passed away, and they said, and you tap into that survivor benefit first, then you could switch over to your own later. Or if you were on your own benefit, again, you're a survivor, you could switch over to the survivor benefit later. So the big answer to that question is, it depends on whether or not you're talking about the worker alive or if the worker had passed.
Thank you, Charo. On that topic of survivor benefits, I have one more question I did want to get to. The question is, are survivor benefits subject to withholding or reduction if the survivor is still working? Does that impact in any way the survivor's benefits when they switch to their own record?
Thank you so much for that question. Emily, you have to help me if I don't remember all the details in the question, but when we're talking about survivor benefits, one of the reasons we did a review is because wages apply. So if that survivor is under full retirement age, then they're subject to a wage limit, to where, so if I start survivor benefits at age 60 and I'm still working, I'm doing 60,000 a year, those wages, I'm going to be subject to this wage limit. And for what I earn over that 22,320 this year in 2024, if that was the scenario, is going to affect my benefit. There's going to be that withholding for $1 for each two. I think there was a second part of that question, Emily.
So it was, sorry, it was, does that impact in any way the survivor's benefits when they switch to their own record, was the second half of the question.
So then what I'm going to do and take that question is, if you're talking about if you start receiving benefits on your own record first, because with survivors, you do have that option to switch from one record to the other. So you're receiving on your own record first, and you have wages, and you're under full retirement age, you have that withholding. And then later on, when you switch over to the survivor benefit, we're going to start over with a new benefit amount. That benefit amount, again, that up to that 100% of what that worker was receiving. And then we're going to look at your age at that point, will determine how much of that 100% you would receive. And then your age at that point would determine whether or not you're subject to a wage limit. So really great question. It allows us to add the different layers there.
That is awesome. We are just a little bit over, so I think maybe we want to wrap it up. Charo, is there anything that you haven't addressed tonight that you just want to point folks to and remind them before we hand it back to Tish this evening?
You know, I have to say that time flies when you're having fun. Please know our website, ssa.gov, is a great resource of information. We have the answers to our frequently asked questions there. There was not a question that came in tonight that was not one of our FAQs. So just know ssa.gov/FAQs, but I just encourage you, check out our whole website, ssa.gov. We redesigned it to make it more task oriented. And let me get my visual up. Let me get the visual and show the website as I'm talking about it. We redesigned it to be more task oriented. So when you're there, are you here to prepare for benefits? That's what we're doing today. That plan for retirement tab right under prepare is awesome. There's so many links when it comes to things that you want to consider when starting Social Security benefits. Non-covered pensions was one thing we talked about tonight. Wages was something we talked about tonight. The cost of your health insurance, other income, things like that. You'll see that there in that plan for retirement tile. When you're ready to apply for benefits, you can just come right over to apply for benefits. When you're ready to manage those benefits, you're able to do so online. So again, I just wanted to remind folks about ssa.gov and the phenomenal resource that it is.
Wonderful. Thank you so much, Charo. We really appreciate it. Thanks for being here. And I'm going to hand it back to Tish now.
Thank you, Emily and Addison, for marshaling us through all those questions. I want to give an extra special thanks to Charo for taking time out of her evening to be with us. If you enjoyed today's program, please spread the word by sharing the event series with your networks, whether by word of mouth or on your social media channels. You can find more information at www.aarp.org/IN. Thank you and have a great rest of your week.